In short, there are grounds for optimism. There are limits to the amount of quality shallow water sites that are going to be available in maturing markets. Although bottom fixed is going to continue in the short to mid-term, longer term growth is going to come in floating wind. To do that, you need to, people are starting now. They're doing the demonstration projects, they're building up scale, and there are now auctions for commercial size wind farms out there. So if we look at the things that are going to drive floating wind activity, and it's the activity, a lot of it needs to be done this decade, but you'll see it grid commissioned in the next decade, because these projects have very long gestation periods. They're 4 to 5 years offshore for a commercial wind farm. So these are long projects, but you need to start well ahead of time. So the 4 key points that builds on the confidence in the long-term pipeline, and we really address this in a current report that we've just released on the floating offshore wind vessel forecast, looking at what drives that through up to 2035, actually. It's auctions and auctions awarded. And auctions, so that means space offshore has been awarded to developers to say, you can assess these sites and develop offshore wind on these sites. And that's happened in Europe, it's happened in North America, and it's happening now in Asia. So that creates the inventory for the developers. They need to get that power to shore, so that's really grid connections. Now, today, the grid infrastructure was not built for wind farms offshore in remote locations. Today's grid infrastructure was built near onshore power plants that are near population centers. So we need to get that power from offshore to an onshore connection into the grid, and that needs investment, and that's been identified and it's ongoing. It's not one of those today activities. That's something that's happening through this decade and into next decade, and that's driving a lot of supply chain activity in factories onshore, in vessels, in ports, that whole supply chain. The developers, they need certainty of revenue. They need an offtake mechanism. They need to sell it to somebody, and they need some form of revenue protection. And this is recognizing that floating offshore wind costs are higher than bottom fixed wind costs, especially at the beginning. And just as in bottom fixed wind, governments are required to subsidize and fund the technology and create the conditions for growth to allow it to accelerate, and that drives down the supply chain costs. We're not there in floating wind yet because we just don't have the scale. But those offtakes and that revenue protection is starting. It's already been awarded this year on some projects, and there are others that are being identified and announced. So that's something that is going to roll through over the next few years. There'll be awards of those revenue protection or offtake mechanisms. That means that the developer has a route to market. Then he can take their, or the developer, the developer can take their investment decision to build a wind farm. And that's really what the supply chain needs. So at the moment, we're getting it in small scale, and the supply chain, leveraging the existing oil and gas and offshore construction supply chains, can deal with the demonstration and small scale projects. But to reach that commercial scale projects where the activity is really required towards the end of this decade into the next decade, those signals need to be sent now to the supply chain. There need to be the agreement. So this is where there has to be the collaboration with the developers, with the government agencies and the supply chain to allow the investments to be made in the factory capacities and capabilities, and also in the vessels. Because one thing we're going to talk about is that there is a shortage of vessels.